Good afternoon, everyone. This is Mike Hogan from Jeffersonville, Indiana, bringing your midday grain comments for Tuesday, September 13th, 2016. We're coming at you today after the close. Looks like corn was down about 9.5 cents across the board, beans 19 to 20 cents lower, and wheat lost 8 pennies. Today's move was essentially macro market driven. We saw the dollar at one point in time over 50 points higher on the day. We saw the Dow Jones losing about 270 points. S&P down about 31 points. Oil was off a buck to a buck and a half most of the day. Same thing in the metals. So most of that was based off of news that the IEA had come out and mentioned that they did not believe that oil demand would be as great as earlier thought in the year. So that certainly had everybody back on their heels. That was basically just worrying about global growth issues, etc. So we've kind of gone back and forth with that. Some of the Federal Reserve presidents have also kind of skeetered back and forth over the last couple of days on things as well. So when that stuff tends to happen, usually just kind of flush the markets in general. So that's where we're at today. Yesterday we did have the USDA report that was out. For the most part, I think within most folks' expectations, so nothing that was kind of breaking the bank, so to speak. We had a very muted response to that yesterday. Today, in fact, was probably a larger response given the macro issues than we had to the USDA report. In other news, I think early corn yields have been probably a slight bit disappointing. We've heard them off anywhere from about 3 to 5% across the board. From that standpoint, again, that's early in southern planted corn. We do expect that to probably progress and get better as we move north, certainly coming closer to the USDA's intended numbers. As we look at the charts right now, I think there's a couple things of interest that we want to look at. It looks like corn's making its intermediate highs here over the last couple of days, probably trying to now sneak down into its fall lows. Usually that happens around the first part of October. We did score the 301 mark using September futures on the continuation chart a couple of weeks ago. I think that number is probably a good one to look at for either for a potential double bottom, or we could continue to drift down towards the 287 number would be my secondary thought at this point in time. Beans, very similar story there. We've got support just below the market at the 938 level. We closed at about 944 today on the November futures. Looks like support below that would be 910 or all the way down at the 850 mark. My personal vote is for a number in the upper 8s, lower 9s as our fall low at this point in time. Wheat's in a flagging pattern. Did just touch $4 today on the December futures. However, a bearish flagging pattern means that you spend a little bit of time going up as we have the last few weeks before eventually breaking down. That downward mark could be in the 375 area. So all in all, I think we're starting to enter into the precipitous drop that you see as we enter into the fall part of the year. I don't think we'll see much from a fund standpoint leading it down. I think they've already cashed or put their bets out on the table. Right now we just need to see farmer bushels going over the scales to increase selling in the futures boards right now. So that's what we know for today. Again, as always, my opinions are my own and not those of CGB Enterprises or any of its affiliated companies. Thanks. Have a great day.